Welcome, grade 11s, continuing with our lesson on adjustments. What is it that we have to know that is important? Remember, we have dealt with a few adjustments already in our previous lessons. Okay, this adjustment that we will be dealing with, remember when we are talking about the matching concept, what are we referring to here? In the matching concept, we are referring to matching incomes and expenses within a given financial period. Okay, so when we are dealing with the matching concept, what we have to take into consideration is the following adjustment, namely accrued income. And what is important for you to take note of is that accrued income is an adjustment that is done at the end of your financial period. Remember what we said? We have to match our incomes against our expenses. So in other words, let us take a look at an example. In this example, you see that you have rent income and the figure that is given to you in your pre-adjustment trial balance amounts to 15,000 Rand. And you are told that the rent income per month amounts to 2,000 Rand per month. In other words, what you can clearly see here is that the 2,000 Rand per month, if you multiply it by 12 months, which is the financial period, you would get an amount of 24,000 Rand. Now, let us take a look at the ledger account. Okay, so here is your rent income account, and in your rent income account you have an amount of 15,000 Rand. Remember, this represents the income that you have received. Clearly you can see that the amount that you are supposed to receive is an amount of 24,000 Rand. In other words, you have earned rental, but you have not received it as yet. Therefore, an adjustment now becomes necessary. And what is your adjustment? It's a debit to accrued income. Remember that this is a balance sheet account, and you are going to debit this account with 9,000 Rand. Where does the 9,000 come from? The difference between my 24 and the 15,000 Rand. If I am debiting accrued income, I have to credit my rent income with 9,000 Rand. What have I done? I have adjusted my rent income account now, and therefore the 24,000 Rand can be closed off to my profit and loss. Okay, now, in terms of my financial statements, rent income will now appear in my income statement as rent income, open my bracket, 15,000 plus the 9,000 to give me a total of 24,000 Rand. That's how this adjustment will impact on my rent income. Remember, accrued income is a balance sheet account and therefore will appear in my balance sheet under the item trade and other receivables. Why? Because it is a balance sheet account and it is an asset, meaning that's the amount that is owed to me, an amount of 9,000 Rand. This amount here would now appear under trade and other receivables. One of the items would be accrued income, and the item would have a total of 9,000 Rand. So that's the adjustment on accrued income. Let's take a look at another adjustment. Okay, now this is my rent income account, and in my rent income account I now have a figure of 30,000 Rand. So immediately I can see that the 30,000 Rand represents the amount of rent that I have received. I know that my rental per month amounts to 2,000 Rand, and I have rented out the premises for 12 months in this financial year, giving me a total of 24,000 Rand. That's the amount that I have earned in terms of rental income. Doing my comparison, I can clearly see that now I have what is called deferred income, or another name for it, income received in advance. And my double entry would be, watch this carefully, a debit to rent income of 6,000 Rand and a credit to income received in advance of 6,000 Rand. Understand that this is a balance sheet account and this is a nominal account. Now, in order to close off my rent income to my profit and loss, the figure would be 24,000 Rand, and that's the amount that I transferred into my profit and loss account. And how will my rent income appear in my income statement? I would have rent income, open my bracket, 30,000 Rand. Watch, this entry is on the opposite side, meaning minus 6,000 Rand, and the final answer would be 24,000 Rand, and that's exactly the amount that I have earned. Now, what now happens to my income received in advance? My income received in advance, like I said, is a balance sheet account. So under trade and other payables, because it is a liability, right? And therefore under trade and other payables in my balance sheet, it would appear under this item, under trade and other payables, I would have income received in advance. Remember, another name for this account is deferred income. Make sure that you know both of them, and the figure here would be 6,000 Rand. So in other words, what are we saying? We are saying that with our incomes, what are the two possibilities? The two possibilities in my incomes are either an accrued income, and in this case here we know that this is a balance sheet account and that it is an asset, and it would appear under trade and other receivables. And the other option is if the income is received in advance, it is called deferred income. And we know that this is a liability, and that this would appear under my item trade and other payables. Okay, so let's take a look at a question. The question states that if my rent income the figure that appears for rent income is 10,000 rand, and my rental per month is equal to 1,000 rand, and the premises has been let for 12 months. What would be my double entry? Okay, let's look at the question again. In terms of the given information, the rent income amounts to 10,000 rand, the rental per month amounts to 1,000 rand, and the premises has been let for 12 months. Immediately you can see your journal entry would be a debit to accrued income, and the amount would be 2,000 rand, and definitely you would credit your rent income with 2,000 rand as well. Right? Based on this same question, we would want to know how would the rent income appear in my income statement. Remember, rent income would appear as follows. Open my bracket, 10,000 rand plus the 2,000 rand to give me a final figure of 12,000 rand. And accrued income would appear in my balance sheet under the item trade and other receivables. Okay, so make sure that you are now in a position to deal with any adjustment dealing with either an accrued income or a deferred income, which we also refer to as income received in advance. From me, Ashraf Patel, until the next lesson, goodbye.